afternoon, everybody. This is Trey getting back in touch with you from Japan. And boy, do I have some good news for you. I got to watch Ford versus Ferrari this weekend. And dude, that was a very good movie. If you haven't seen it, I recommend it. I'm a car guy, but I also like movies. Dope movie. Check it out. Anyways, today, moving on, we are looking at Walmart. This week, we're going to try and look at Walmart, Target, and Costco, and also how Amazon is encroaching on their territory, their long-held territory. So please join, subscribe, check it out this week if you'd like to learn more about that. Anyways, moving on to Walmart, I'm going to throw some facts up on the screen of just how crazy huge Walmart really is. They have 11,500 stores under 56 different names in numerous countries. They're not just in North America. They have stuff going on in Japan, Europe, South America. Check this out. In North America, they have stores located within 10 miles of 90% of the US population. That's crazy. That's roughly 2.5 times Target's number of stores. In 2020 so far, grocery sales make up roughly 56% of Walmart's sales. That surprised me. I didn't know they were such a big grocery store. The Walmart stock does include the Sam's Club brand, which is similar to Costco. They're competing with Costco. They're not quite as good as Costco, especially this year. But their sales per square foot is $785 versus Walmart's $435. On the topic of Walmart's influence, Walmart stores are responsible for 15% of Procter & Gamble's sales and 13% of PepsiCo's sales internationally. You may not know that Walmart is also growing their e-commerce efforts. In 2020 so far, e-commerce has only made up about 7% of their sales, but that still ranks them in the top 20 of North American online retailers. So far, their e-commerce growth this year has been 74%, which is mind-numbingly fast and huge. I mentioned earlier that they have stuff going on all over the world. International representations of Walmart make up about 23% of their sales so far this year. If you're enjoying the video so far, please take a moment to give that like button a little massage until it changes colors. And if you want to stay tuned for the other videos we have coming up, especially the comparison videos, hit the subscribe button below and let's stay in touch. So if you're seeing this video, you probably already know a lot about Walmart. You've probably already been there before. There's a lot to talk about in terms of their supplier relationships and how they can guarantee really low sales. Their target market, especially in North America, is lower to middle income ranges of society. And even though Amazon is making such a big push, making such big growth, especially this year since the sickness has started, Walmart is proving that they may be one of the few traditional retailers that can stand up and fight against Amazon's onslaught. So Walmart's Superpower, everybody's probably heard a little bit about this, but Walmart's Superpower is basically, because they're so super huge, they can go up to any company and say, hey, I know you normally sell this thing for $100, but if we buy 100,000 units of it from you, you can sell it to us for $80. And for a lot of smaller companies that are producing whatever it is, like a lawnmower or a crock pot or food or whatever, they're like, wow, we're going to take a hit on profitability, but we're going to be able to output so much more. And Walmart's going to come in and say, hey, we're going to buy huge amounts of this because we want to distribute it all over the country or all over the world. And so that ends up being a really big part of their strategic advantage that they have over other companies and other retailers. Continuing off of that, I mentioned earlier that they're growing in groceries. Groceries are traditionally very low margin and very high competition. You go into a grocery store and they'll have like a few pieces of each item. They're not usually stocking like millions of one specific item. And so when you offer so many different types of products, you have to manage the spacing, you have to manage all the pricing and all the different supplier relationships and things like that. It's really complicated and margins are really thin. But one of the ways Walmart uses that is they say, hey, coming in for cheap groceries, oh, and while you're here, why don't you pick up that DVD? Or why don't you pick up a soda? Or why don't you pick up, whatever? Because Walmart offers like everything. You can pick up a ride-on lawnmower or a sofa or get an oil change while you're at it, And the groceries in recent years have become a draw to get people to buy their other higher margin items. Other grocery stores can't compete with this because they're just grocery stores. And other retailers who don't offer groceries can't compete with this because people always need to go to the grocery store, you know. So if you're like, oh, I'm already at Walmart, I might as well get that video game here instead of going down to Target or wherever. So that gives Walmart a really big competitive advantage in that. One of the other considerations, we've seen recently that Amazon is expanding so quickly, they're kind of like, wow, we're running out of storage space. We're running out of warehouses to be able to distribute from all over the country. And we also want to be able to offer more rapid shipping. Walmart is like, hey, bro, we already got warehouses like, you know, down the street from every single person in the country. They're being really aggressive with their e-commerce offerings recently. As I mentioned earlier, they're growing a lot this year, and they are planning to leverage that warehouse space that they already have and that transportation network that they already have. And so, you know, you can go on Amazon, order stuff. Some things can get to you in a day or 2 or 3, but it's possible to order online in Walmart, and you probably could just pop in and grab it. Or if there are other things that you're ordering online, using their already extensive shipping network, they can probably get it there in the next day or so. And they may start offering delivery from the warehouses to individuals' homes as well. So that's kind of exciting on that front. Walmart is noodling on the idea of Walmart Plus, which would basically be something like Amazon Prime. It's going to be cheaper than Amazon Prime, and it's going to offer many different benefits to it. Walmart knows their target market. They know their budgets, they know what they need, they know what they like to buy and what they can splurge on, and I feel like they might be able to hit that target market more effectively than Amazon can right now. We'll see how that rolls out in the coming months and quarters and years, but that's one way they plan to stand up against Amazon. From the vendor's point of view, a lot of vendors look to Amazon and say, yeah, I need to be on Amazon if I want to be growing. But when Walmart comes in and says, hey, you can sell in our stores, generally the dollar sales that they're going to be doing through Walmart is much more appealing. This gives actually Walmart a really big advantage over Amazon. Next, let's jump into some of the numbers so we can get a feel for what we're looking at. Walmart's market cap is about $366 billion. Current stock price is 129-ish bucks. That's what it closed at last night. 52-week range of 102 to 133. So we see they're on the higher end of that right now. But another thing that stands out to me is that 52-week range hasn't varied that much, especially compared to a lot of other stocks over the last few months since, you know, February, March, when things took a big crash. PE ratio of 24.85 with a forward PE ratio of almost 24, just under 24. First quarter EPS of $5.26 with a quarterly dividend of 54 cents, which is an annual dividend of $2.16. Their annual dividend yield is 1.65%. Their 3-year dividend growth rate is 2% versus the S&P 500 average of 13%. You got to be careful when comparing to the S&P 500 average because there are a lot of different kinds of companies on there. But as far as retail goes, this isn't like filthy low or anything like that. But it's just something to think about. It's just something to consider when looking at a stock, especially if you're a dividend investor. Return on assets is 6.6% versus the average of 3.3%. And return on equity is a staggering 22% versus the S&P average of 12.7%. Let's take a look at the recent price charts. We see here in the 6-month chart a sharp W going on in the middle of March, which I think was pretty surprising, followed by another dip. Went back up and hit kind of like a high in April, which is weird. And now it's almost back up to that high. Let's switch over to the 2-year chart. We see here good kind of generally smooth growth with a couple of jiggles, a couple of W's in there. Let's zoom out to the 5-year growth. Similar thing. See a big spike in 2018. If you don't know, in 2018 there was a moderately large decline. Nothing compared to what we're going through at the moment, but that is reflected in this chart. But generally speaking, you can see kind of a smooth trend up. And those spikes, pay attention to those spikes because the range of them isn't actually that dramatic compared to a lot of other stocks. Which brings me on to my next topic. Walmart has been around for a while and Walmart continues to grow. We're kind of seeing like single-digit growth overall. I mentioned really big e-commerce growth earlier. Single-digit growth overall. internationally, single-digit growth, and we're expecting that to continue into the coming years. I think depending on how Walmart Plus goes, and then also how e-commerce grows, if we see Walmart able to tap into even just a small portion of the people who are just like Amazon only forever for everything, I think we'll continue to see them growing really well in e-commerce, and maybe even start to make a shift into being more e-commerce centric compared to how they are now. So what do I think in terms of buying Walmart now? I think Walmart is one of those big companies that's going to continue to grow. It's not going to ever disappear, at least for 20, 30 years. It's catching up. It was behind in e-commerce. It's catching up on that now very aggressively. And I think shareholders can find peace in that. Do I recommend to you to rush out and buy Walmart right now? I think right now at the current price it's at in the 120s. I feel like it's a little bit high. Feels like 105 maybe. It also depends on your investing style. If you're the kind of person who's like, I want to get into a stock and in a couple years I want it to be like double or triple, it's definitely not the stock for you. Just stay away. Don't touch it. But if you're kind of like, yeah, I would like to just put a little bit here and there and hopefully over the next 20, 30 years see a return on investment. They offer a little dividend and like fine growth. I think it's not a bad choice if you're that type of investor. If retirement is on the horizon in 5, 10 years, probably not worth your time. But if retirement is on the horizon in 30 or 40 years, probably worth your time. It's not one of those sexy stocks where everybody's like, oh my gosh, I gotta get it now. It's gonna go flying like Tesla or something like that. But it's just kind of one of those solid and steady ones that's not gonna go away. So take that with a grain of salt. I hope that was helpful for you. Please let me know if you have any thoughts or concerns or fears, or if there's anything I missed, let me know. Looking forward to seeing you again soon. Thank you.